All right.
Okay, good evening. Assalamu alaikum to all our viewers. Assalamu alaikum to Faisal Saab, Salman Saab, and to everybody who is live with us today. It is 8 p.m. in Karachi, where Salman and myself are, and it is 9 a.m. Is it true, Faisal Saab? 9 a.m.?
No, it's 11 a.m. in
Oh,
Toronto.
11 a.m. 11 a.m. from Toronto. So we're covering, across the globe. So very happy to be here in the second episode of the Retail Reset. I couldn't unfortunately join the first one due to a family emergency, so missed that one. So today, what are we going to talk about? So let me just set the scene, and then I will ask Faisal Saab and Salman Saab to join in the conversation. We'll be happy to take your questions, comments as we go along. So please, keep it interactive and join us with the conversation. So the topic for today and what we're going to talk about today is retail reset, or rather, retail banking reset. So retail banking, why? Because all three of us on this call are not just practically have been through retail banking, but are very extremely, it's a very important part of who we are, of our lives, our work lives, our it's something that we carry and very very dear to our hearts as well. So retail banking and this word reset. So today I think we're going to debate, or we're going to talk more about why is there this reset, why do we even need a reset. And then I'll just open the floor and we'll have a conversation on is there really the need to reset? Because reset, from what I understand, is when my computer is slow or it's not working, or where I'm losing my patience with my computer and I want it to move faster. So then I usually say, okay, so either I shut it down, which will take a long time, or I say reset, and then everything smoothly at the background, but it needs to be rewired, reprogrammed, and then somehow the speed gets in. So my first question to Salman would be, why do we even need a reset? Why are we even talking about a reset today?
So before I start on the reset, Hafsa, you said Faisal, it's morning where Faisal is in Toronto and evening here. It seems like we're coming back from work, but Faisal is going to work.
Yes, yes, absolutely.
Look at the way he's dressed. He's just he's
That's true.
every time I look at him, I
Old
feel
habits die hard.
I'm a
Old
banker.
habits die hard.
Okay. All right, Hafsa. Retail reset. So why retail reset? That's a good question, Hafsa. Um, let's just first understand, we spoke about the retail banking business portfolio. What is retail banking, etc. in the past. So I'll just recap that. I think very simply put, retail banking is the part of the bank that serves individuals and small businesses, all the products and services provided to them. Um, and we're talking today about a retail reset, and we'll go into portfolios. But I think the reset is required today because, in my view, if you ask me, um, how is the retail banking business in performing in our market? Is it fully capitalized? Is there room to grow? Is there no room to grow? Where do we stand? So as far as I'm concerned, after having looked at and I've been fortunate since since I've come out and we've started consulting for the last 10 odd years, to be able to have a look across the banking industry at retail businesses and 7, 8, 9, 10 different banks as such as well. Um, and then if you ask me, how is the retail banking business doing? And all the previous questions that I just put, I would say the retail banking business can grow by multiples. That's the positive side of looking at it. And if I may, a bit of a gap analysis in that way, one sentence gap analysis, the retail banking business is underperforming by multiples. So that is why I feel that the reset and a step back and a look at this business is thoroughly required. And we can go more into detail
Okay,
as we
thank
go
you.
on.
Thank you. So the premise over here is that the retail banking business could be growing by multiples, which it is not. And then, we debated on, okay, so what are the missing ingredients, let's say? And we're going to talk about one of that ingredient today. So I'm just building the case that, again, to put this reset into motion, we said that, okay, there were what does the retail banking business need to be looking at? So there were some pillars that we, mutually, thought of. One was, of course, people. Of course, we have portfolio that we're going to talk about today, and processes. And we thought that, we'll take it along the conversation as we follow. So today, what we're going to talk about is the pillar portfolio. And nobody better than Salman to talk about portfolio, because that he has that for breakfast, lunch, and dinner. He's so conversant with that. So let me first ask you, but how would you define portfolio? What is a portfolio in terms of retail banking?
That's a very interesting question, Hafsa. And we spoke about this earlier as well in the last talk, but let me just throw some light on that from my perspective again. Portfolio, retail customers, individual small business customers are generally served through the branches. So in the branch, there is a portfolio of retail customers, and the branch is serving those customers. Now, when we look at that portfolio, um, we look at, okay, now, how many customers do we have providing business to a bank? What is the ratio of customers not providing a business but transacting only and adding cost? Um, what are the sort of products and services that the bank is providing to these customers? Are these customers underserved? We talk about unbanked
Hmm.
and underbanked.
Underbanked.
Yeah. And we're all talking about new to bank customers, digital banking, micro banking, acquisition of so many customers from the market, bringing them into the fold. My question is, today the number of customers in a bank, are they actually served properly? Have they been provided all the products and services proactively the way they should be provided? And the answer is no. Um, Therefore, the opportunity is huge. So when I look at a portfolio, I look at, what is the percentage of customers that are providing business to a bank? What is the and how are they served? Are they served underserved or not? Um, and how can the bank now look at their portfolio and take measures to be able to serve the customers better, but also to be able to run a good business, grow revenue streams, and optimize their costs at the same time? So I guess when you look at a portfolio, you look at this. Now that's branch banking. There is one other piece, obviously, that I think we just need to touch upon, and that is the unsecured business in a bank. So that's credit cards business and the personal loans business. These are also portfolios that are not necessarily relationship managed through the branch, or in my view, shouldn't be, um, unless these products are being taken by certain sorts of customers that provide other business to the bank. But generally, as a portfolio, this unsecured business is also a portfolio that needs to be managed efficiently by the bank through alternative delivery channels. So
Okay.
these are, in my view, this is the portfolio, so as to speak, in a bank. Uh, is this portfolio optimized, maximized? Like I said earlier, no, it is grossly under optimized. And the banking industry is, rather than looking at their portfolios and serving them better and actually building more business for themselves, they keep running after new business, new customers that are not in the bank, and they keep running after them, Once they become their customers, then they drop them like a hot potato, if I may. And the customer kind of more often than not feels lost. And we'll talk about what is the percentage of customers that need to be served properly through the branch, and what is the percentage of customers that is being served today, and what are the products that they're utilizing? How do we look at product penetration,
Okay.
and things like that.
Okay, thank you. So just one more question and then I'll move on to Faisal Saab. So just to recap what you've talked about is
Hmm.
that when we look at a portfolio, and so there is a healthy portfolio, and there's the word which I can use is a diseased portfolio. If you just say, I'm healthy and I'm unwell, or diseased portfolio. And there are some, I would now want to see the danger signs of a diseased portfolio, because it's difficult to see if you're healthy or not, but if there is a disease, then it's easier. So what in your view, Faisal Saab, would be some of the key things that you can say that, okay, these are the factors that can tell me that this portfolio is either diseased or going to be deceased very soon as well. So what do you think?
Yeah. Thank you, Hafsa. I think Salman has already set the tone, to this question, to this important question. And from the point of view of customers, he has already alluded to the deficiency in service levels, right? So that obviously is one of the indicators which basically points to the health or hygiene of a retail banking portfolio. But I think we should also be looking into certain other factors, because you said that the entire retail banking industry or sector in Pakistan needs to have a reboot or a reset. So I'm sure that Salman will also talk about those deficiencies apart from just the customer service. But I think some other factors, in my opinion, could be the limited access to data. Okay, or you can say that the data is available there in some form or shape. You have the metadata, but you don't know how to use it from the point of view of customer experience, the kind of experience that the customer is looking for. Then, yes, we have talked about branch banking and also the other distribution channels, which of course uh, may not involve a face-to-face kind of interaction between the bank and the customer. So, I mean, the irony could be, or maybe I should say that the paradox is that while there is a large segment of the customers who don't have an issue with faceless interactions. I think there is still a large number of customers in Pakistan
Oh,
which
yes.
really want to have face-to-face interactions. So, in such cases, less face-to-face interactions. I don't know. I mean, Salman has to basically add in his own opinion as well as experience, and then that also brings me to the digital self-service kind of a channel. So for some people, for let's say the educated people, and I would say that for the new generation, which we refer to as Generation Z, and I would also include the millennials, in this segment. While they may be very much used to and facile with such distribution channels, as I said, the digital channels, but still, I mean, we have to look at the Pakistani market. There may be a large number of customers who are not so comfortable with that. So that could be one of the deficiencies. Um, then I would say, I mean, based on what I have seen in my experience, not from a frontline perspective, but from a business enabling kind of perspective, from operations and certain other areas in which I've worked at, I think the first 30 days when a customer actually opens an account, or we should say opens a relationship with the bank. I think those are really important. I mean, in those 30 days, and one can say even 15 days, but there is a I would say short window of time in which the bank really has to make the customer comfortable that okay, the choice that he has made, the decision that he has made to bank with a certain bank, has indeed been the right decision, not only in terms of the products and services, but in terms of the communication, in terms of uh, that confidence that I've just alluded to. So I think these are the areas which really have to be worked on. So Salman
Thank you,
might
Faisal.
add something more.
I really like the first 30 days concept, because it hits me from my people and HR side as well, because the same thing applies to employees as well, right?
Right,
So we engage with them, and the employee experience which we provide to employees, and over here the customer experience that we provide to customers is the litmus test. And as Salman said, that we acquire, we're very good in acquiring, and then we say, okay, now job done, let's look out for the next one to acquire. So we
right.
don't really spend time in building relationships or honing that relationship. And that is, I think, what we're talking about today, is that from what I've picked up from the two of you is, and if I were to just put it in a nutshell, that again, retail banks of today are not really customer centric. We have, every bank has customer centricity as a value. Yes, definitely they have it up there on the wall, but their processes, their behaviors, their portfolios don't mirror that. So I think that is, so it's completely a product oriented operation, product focused, really not customer or need focused,
Absolutely
from that
Correct.
perspective, as well. So would I be right in saying that? And then, of course, you talked about the unbanked and underbanked, and that again goes hand in hand. We go back and say, okay, let's go and get the people that don't have bank accounts. What about the ones that have bank accounts, where you can really build and get more business out of them, get more relationships, get more referrals, and deepen that relationship? Because we know that once the relationship is deepened, the customer is sticky, and they will also get better referrals for you. So it's a snowball effect. So I think Salman, so what do banks need to do? So let's say I'm the CEO of a bank. I want to do a dipstick and see how healthy is my portfolio. So which battery of tests I go to Khan and say, I want to get all these tests done, so I want to check the health of my health. So what are those, some of those tests that a bank can do to check the health of its portfolio?
So generally, Hafza, we look at various things. So one of the things is you look at concentration risks in a retail portfolio. Um, and I'll just talk about them first. Sort of line them up and then discuss.
Sure.
So concentration risk is one. Um, the other is what is the portfolio? What is the product penetration um, within the valuable customer portfolio in a branch? The third is what are the loyalty scores coming out to be for these customers? So, if I may, there is a Pareto in every branch, and actually, if I may, if it's an 80-20 Pareto, Pareto is 80-20, but if it's 80-20, then actually we talk about relationships. A branch is there to build, in my view, very clearly, to build relationships with customers within their relevant branch trade area who have a size of wallet. Now, that size of wallet may differ from area to area, but you will always have the top 20, 30% customers in every branch trade area giving you the bulk of the wallet or bulk of the business. Now, when we start looking deeper in that, we find that the 20, 30% customers are not engaged. Actually, it's generally the top 1 or 2% customers that are engaged. So if you go to every branch and ask them, what is the number of customers that you actually work with to build business, be it a 5,000 branch customer, a customer branch, be it a 2,500 customer branch, generally they'll tell you that it's 25 to 50 customers that build business, right? But then you start looking at, and that comes out to be 1% of their portfolio in terms of number of customers. But when you look at, because in our market, unfortunately, we just look at deposits. But when you look at those deposits, you will find that that 1% customer carries, in some cases, 80% of the deposits of a bank. And in some cases, 50 to 70, 50 to 80. I mean, that's the sort of ridiculous kind of concentration risks that you find. Then you look at the next 10, 15, 20% customers right under them. They will actually constitute the rest of the deposit business, if I may. And if you ask the branch managers or the management, do we have a relationship with these next 100, next 150, next 200 customers? Generally, you will find that the answer is never a confident yes. However, banks have relationship managers allocated to the branches exactly, to do this. But the execution of that, neither have you ever seen, nor have I ever seen, being customers of a bank, nor I think Faisal would have ever seen. Has a relationship manager ever reached out to you and built a relationship with you? Solved your financial problems? So when we talk about people, we'll get there, but right now you see it in the portfolios as well. You find that the middle portfolio, which we call the core portfolio, right under the high net worth 1% portfolio, is not relationship built. Now, these people offer a huge potential for growth. But I generally call them, and I'll just tell you a quick story. I was when I was working, we were together at ABN. I went to Lahore and I was visiting a branch there, and I was speaking to one of our customers at the main branch, and they said, listen, we really good service, we really enjoy the bank's experience, etc., etc. And I was very happy. And lo and behold, while he was walking away, he said, but I want to tell you something. I have with you 2-3 million rupees, but I have 30 million rupees lying with another bank. And I said, aren't you happy with my bank service? He said, yes, I'm very happy. And I said, but why have you not then kept your business with us? And I'll say this in Punjabi because he said it to me in Punjabi. He said, "Gal hai ki kisi ne puchhiya hi nahi." So nobody ever asked me, nobody ever inquired about my business. The only time I was talked to when I was being brought in, I liked the post-sale service in the bank, but nobody's actually spoken to me about any other needs, my financial needs. They're happy with my 1 or 2 million rupees, and that's it. When I went and spoke to the relationship manager, and I said, this is your customer. He said, yes. I said, well, haven't you ever spoken to him? He said, he just has 1 or 2 million rupees. So unless the customer lines the bank up with their deposit, we don't speak to them. So that is the big issue, if I may. We are not proactive other than that top 1% customer. And by the way, where is that 1% customer coming from? That is the branch manager's own customer base, own customer portfolio. The branch manager continues to build a relationship with them. And lo and behold, you still don't have product penetration even in that customer base. You have 1 or 2 products sold there, and seldom will you find more than 2 products being sold at that level as well. I mean, that's an issue of KPIs, and we'll talk about that as well. But here you find that those next 100 and next 200 customers are not being relationship built. That shows up very clearly in the portfolio, and the reason for that is that we are not configuring the retail banking business properly. We are not providing it the right framework. We have made it, like you said earlier, we've made it into one product sale business, and that is sub-optimizing, grossly sub-optimizing the costs that a bank puts into this business, be it branch, be it central ops, etc. Hugely sub-optimize it. So when you actually then start talking to people in the banks and the branch managers, and they say, well, why don't you do this? He said, because, well, we're just asked about, what's happening with current account, what's happening with, one day it's current account, then next day is bank assurance, then some days it's auto loans. It's never do people ask us about, how many customers have you built relationships with, how many customers, what is your product penetration, what is the top 150 customer base looking like, do we have a profiling done for these customers, how many times have you met them, how many times have you eyeballed them, what's the loyalty score for these customers. None of these questions are being asked. Whereas in progressive environments, the goals have changed, and just by changing the goals, you find that the business development in those progressive, more capitalized environments has actually been higher for banks who realize that relationship is the way to go forward for branch banking.
Absolutely. Thank you, thank you. So picking up on something on your example, which is again an eye opener, aha moment completely, and then linking it to KYC, right? So we talk about know your customer, and here clearly that element was completely gone missing, right? So he had no idea about
Yes.
where the other 30 million was. So on the KYC front, Faisal Saab, I want to ask you again from your AML, CFT, the risks of a portfolio. So how is this linked? So we do KYC, banks do KYC, but that is a purely mechanical operational form that they have to fill in and tick in. But KYC in actuality means something else, right? So would you want to just shed some light on that?
Yes, obviously that itself, the KYC type of compliance is a very vast subject, and I'm not sure if we'll be able to cover it in a few minutes. But just to sort of underscore this requirement, which has been imposed by our regulators and also by the international organizations like FATF has got some standards and recommendations which have to be fulfilled. So, know your customer is basically sometimes also called the customer due diligence. In fact, I would say that it is a subset of the CDD or the customer due diligence exercise that has to be completed whenever a customer is not only onboarded. You see, uh, I would say that up until a few years back, it was something, an exercise, the KYC exercise, which was supposed to be completed at the time of onboarding, and then it had to be completed depending upon the risk level of that customer relationship, either on an annual basis or after every 2 years or 3 years, depending upon the spectrum of risk in which the, the customer or the relationship was placed. Now it is basically, you can say it has to be done over the life cycle of the relationship. In other words, you can say that this KYC has to be done on a real time online basis. So for that you need systems. For that you need very smart kind of technology. So you're right that at this point of time, or I should not say this point of time, but up until a few couple of years ago, it was just a box ticking exercise, a mechanical exercise, as you said. But now there are, much more expanded expectations from the regulators and from the international bodies as well. So I don't know if the business side still sees or views this KYC exercise as something bureaucratic, something which has been imposed on them, and something which really places obstacles in their business. But I would have a different opinion, not only because I come from a compliance background, but and maybe it is also in some ways a deficiency in some of our compliance departments or organization, that they just play the role of a policeman, but they don't play the role of an advisor. So, I mean, if you do the CDD or the customer due diligence exercise the right way, there is obviously advantage to the business. You know, they'll be able to start business at a very, uh, I would say, clean sort of level. They will probably not have difficulties during the relationship or during the life cycle of that relationship. They will be spared a lot of free time which might be spent on fighting fires if you don't do the CDD right. And I would even say that customer experience or customer journey includes the compliance experience also. uh, in other words, compliance is part of the customer experience journey. So the bank should have very, I would say, state of the art kind of systems and processes in which the customer does not suffer delays or sort of errors. And there's one more thing that I would like to say, that KYC is not just KYC from a compliance point of view. I think even from a business point of view, and I would like to say or use two terms here. Apart from KYC, it is also UYC. UYC meaning understand your customer, and also EYC, which means engage your customer. So that should actually offer some sort of I would say competitive advantage to any bank who thinks like that.
Very nice. I like that. Thank you, Faisal Saab. Yes. So now moving on from KYC, know your customer. There's just one thing, and there we have questions about it as well. So from a neuroscience perspective, KYC is very important. And there is another concept which I will want to link it is KLT, which is know, like, trust. So the research says that we don't want to do business with people. We don't buy products. We don't promote things. We don't want to do business with people till we reach that trusting phase. And in order to trust, whether it is trusting a bank, whether it is trusting a relationship manager, we need to know him, like him, and then trust him. So this is also that journey where where we are getting to know the client is also getting to know and assess us, that do we really want to do business with him or not. So we also, it's a dual carriage road, right? So it works both ways. So we need to also get to know and connect to people on a humane level. So again, which means have conversations. So yes, digital is great, I love digital as well, but the art of conversation, sitting down over a cup of tea and telling and asking somebody, okay, Faisal Saab, tell me your story, which means, okay, fine, you're here to, okay, open an account, but I want to connect with you on a deeper level. How do we reach there? That is something which is bothers me a lot. Salman Sab, how would you, what would you,
Okay, I
how
think again a very very valid question. And that's the requirement today. I mean,
mm,
why do we have a 1% concentration risk? I mean, I keep going back to these ratios because I'm stuck on them for some odd reason. So the reason we have this 1% carrying the bulk of the business is because that relationship in terms of knowing the customer has been built. So with 1%, the bank actually is able to generate a very huge part of their business. Um, but it's about getting the beyond the branch manager. I'll keep coming to that. We have done that through the branch manager. The branch manager knows their customer very well. They know them by name. They'll go to their house. They'll, attend their festivities. They'll, other such events. So they know them very well. The customer will also give them business because they know them very well. There is a comfort level. Um, but the issue of relationship goes beneath that to the next part, and that's why we do retail business. Um, we are not, we don't put up hundreds of branches to do business with 30,000 customers. We put up hundreds of branches to build relationships with hundreds and thousands of customers, and that's the potential that is available. But why don't we do that? We don't do that because because we're not able to train the next level below the branch manager, um, in a way that they start to do the same thing that the branch manager is doing. um, Again, that goes to people. But if we were to build them up, nurture them, uh, along with the branch manager helping out as well, because the branch manager is in the field. So they're the best people to kind of buddy up with these people, transfer their knowledge, transfer their experience, teach them how to interact with customers properly, and bring them up the curve. And if that can't be done, then the organization should have a solution for it, so that it takes these these people through this process. And the reason I'm saying it is, Hafsa and Faisal, because if you have 500 branches, you have 500 BMs, but then you have more than 1,000 RMs. And the RMs are actually there to build relationships with those 20% customers that we are all talking about. The reason we're all talking about why isn't that relationship being built is that we are not part of the BM's portfolio. We are part of the portfolio that sits under the BM. We may have a lot of potential as customers, but nobody's actually talking to us. And the bank that doesn't even realize that if they get all our business, our major pocket, we actually may give the bank more business, more revenues than that top 1% that that the bank and their branch managers focus on. So I mean, the issue is about people. Um, Faisal just spoke about KYC and UIC, and spoke about the emotional connect. Um, who's going to do that? The BM can surely not do it beyond their 25 customers. It's got to be through these additional resource that we give, who we call relationship managers. Um, so these are the people that need to do that. But other than one or two banks that have actually very successfully implemented this model and are showing the industry that they can build a business with not that many customers, and build a very healthy business and grow their top line and their bottom line. Small banks that are now sitting at number 6, 7 in terms of profitability. That's because they're doing this with their retail banking customers, building relationships with their top 20, 30% customers, solving problems, providing them products and services as problem solutions, and having that connect through the RM. So, and KYC issues, etc., will also be resolved, because if I am building a relationship,
Exactly.
filling up or updating the KYC is natural for me. It's not something that will come as a burden to me. It will come as something natural to me. However, just like Ahmed Aslam mentioned in his comment, that the reason behind not building a relationship is that they're servicing clients all the time. And that's where the bank also needs to think about capacity, right? If I have a branch with, say, X number of customers coming in or X number of transactions taking place, um, and I have two RMs sitting there, and I've actually got them just to reactively service the customer all the time, they're not going to have time to call, develop a relationship with their existing customers. They will keep doing the job of reactive service providers, whereas they need to be proactive relationship builders. Um, and that's the issue. By the way, just one more thing, because I keep talking about ratios and numbers, and so you keep smiling every time I do that. But in most banks, you will find that business growth, actually, net book growth, comes through new to bank customers. If I freeze your existing to bank customer portfolio at the beginning of the year, and I look at it on a month to month basis, say you have
Mhm.
400,000 customers, I freeze their business, I freeze their portfolio on January 1st, and then I look at their behavior throughout the year. Guess what happens? That portfolio bleeds. So my existing to bank customer portfolio is continuously decreasing. Isn't that odd? I mean, I bring you in as a customer, saying that I'm in the business of aftertaste. I'm actually telling you, come in, do business with me. I will provide you good services, and grow your business with me, be it an individual or be it a business, a small business. But I don't do that because the targets given to me are just bring in a new customer
Yeah.
or go sell a product. The targets given to me are not regarding build a relationship, and through this I want you to build business. I want you to grow your existing to bank portfolio by so much. I want you to have a product penetration in your top 150 customers by so much. I want you to have a loyalty score in your existing customers by so much. And by the way, I want you to bring new to bank customers primarily through referrals where it comes to
Referral.
existing,
Exactly. Yeah.
right? So this is something that we all know. It's logical, sensible. It's no rocket science. But when it comes to implementation and getting into an operating rhythm, we just lose the plot, and that's where the reset is required.
So I think now hearing you, because but it's simple. It's I think it's the formula is simple. You you take care of your clients, get to know them, s- provide solutions, give them whatever, and build your ETB base, retain your ETB, grow your NTB through referrals. So, and you have a smaller pie to really hone in your skills. And still, if we are not being able to do that, then to me, I think it is a mindset reset. I think
Yes,
it's here that the button needs to be pressed, nowhere else. So I
exactly.
think the first thing is that we need to believe in it. I think that is it. So I believe in that if we do this, and if we give, let's say, if we give our RMs, we don't give them product targets. We don't tell them that sell so many cards and so many, so much more, and we give them relationship building targets. I think the belief in the system is that it won't work, or they're scared, or there's something holding people back, right? And these are big banks, right? Whatever. So I think, after hearing everything, I think the button that needs to be really pressed, who presses that button and how? I don't know.
So yeah, I mean, I think I'm not sure if Faisal has something to say about that.
Yeah, I mean,
Who?
there can't be two ways about it that when you want to bring about a cultural change, then I think it is something that involves mindsets, and it also involves behavior as well. You need to have role models, who can actually demonstrate the kind of behavior that you are actually targeting.
Hmm.
But I would also say that one of the members of the audience, I think he raised a very valid sort of concern that the relationship managers or the account officers, they are too much
Yes.
bogged down with the servicing, the operational, let's say, servicing of the customer. So we really have to go to the drawing board and see how that can be sort of evened out, so that the RMs, they don't become desk bound. I mean RMs, but they are either out in the market or they are in front of the screens, looking at the data, and also using the tools to find out what their customers actually need. I think that's absolutely important, because I think the last time, I mean, in our first, let's say, session, just about a week or 10 days ago, Salman, you did talk about the gaps between the customers' expectations and what the banks actually provide them in terms of their products and services. Now, for example, the new generation, they may have entirely different needs, and if one bank can't fulfill them, they can even go to fintechs, okay,
Sure.
to get their needs fulfilled. Secondly, I would again, as I said earlier, in the introductory remarks, I mean, um, you need to have some sort of data that I've already talked about, but you also need to have the technology, the tools. I mean, what tools can you provide to the relationship managers so that they can probably engage with the customers on a technological basis as well. Now, that also brings us with the issue of communication with the customers, and I guess we have to use a combination of means. One, obviously, the most important, I mean, it is top at the list, is the face to face or the personal interactions. But then there are, I mean, alternatives to that as well. Okay, uh, you know, uh, it's a good thing that basically COVID-19, although it you know brought a lot of devastation as well, but I think there are some unintended good consequences of that. That you can even hook onto your Skype or Zoom, and you can basically have an interaction with the customer as well. That cuts down your commuting time. You're driving down to the customer's, let's say, place of business, or to his to his home. So that's one way. And then obviously, you have to look at the other nitty gritties as well. How do you communicate with the customer? I mean, I know that one or two of the banks that I have a relationship with, they even send me happy birthday messages. I mean, I don't get a phone call from them. Perhaps if I would have been a high net worth individual, maybe,
Mhm.
but I'm not. So what I get is SMS messages or emails from them with a card and everything, that happy birthday, okay, today is your birthday and all that. That really makes my day. So these are very small things that have to be looked into. And we can talk about more of these things, and then
Excellent.
it would I don't want to jump the gun, and I don't want to get into the processes, but I think if you're talking about a reset, we have to undertake some business process reengineering
Yes,
exercises as well.
exactly.
Absolutely. So
Just
I have my eye on the time. So my last question, and then I wanted to address the questions that we're also taking if we have time. So I'm just saying, my question is to Salman. In your international experience, you worked globally, internationally. Is there any role model bank that has got this right,
Hmm.
and who
Aha.
do we emulate?
So yes, so there is, we've seen, we've spoken about loyalty, right? Loyalty is basically the crux of it also. We
Ji.
talk about relationship banking, um, and lo and behold, I mean, I want to come back and to just remind everyone that in my view, the branch is there to provide reactive servicing, yes, but in terms of business growth, the branch is there to provide to build relationships with the with that top 20-30% customers. The branch should not be driven to work on the lower 70% customers. That is counterproductive, if I may. They will provide reactive servicing to them. Actually, those customers should be served through alternative delivery channels. That is more productive for the bank. Um, but in providing service to these top 20-30 customers, if I was to engage with you, Hafsa and Faisal, as a banker, solve your problems, listen to your financial concerns, and put products and services in front of you, you would eventually land up buying those products from me, right? You would eventually land up, because I'm presenting those products to you after hearing your problems and giving them to you as solutions. Um, when that happens, and if I come and ask you, after 6, 8 months, 1 year of relationship, I come and ask you, okay, will you give me more of your business, and will you refer somebody to us? If a bank does that, a survey, 9 out of 10 times you will give me a score out of on a scale of 1:10 or 11, you'll give me the highest score. So if I do this activity, my your loyalty score with me will be high. Now, Metro Bank in the UK does this. They have actually given just one goal to their branches. They've said we want the net promoter score, i.e., more loyal customers, to be 70%. So if the net promoter score, i.e.,
Okay.
loyal customers, are 70% of the customers surveyed, then you're doing a good job. Lo and behold, the net promoter score will only go up when product penetration and relationship building goes up. This bank in the UK has shown growth in the past, in a fully capitalized market, of 25% year on year,
Wow.
right? By driving, they've understood that what customers want is is a relationship of understanding and a relationship of trust, which is built when you provide them with the right products and services. Retail business is always about repeat sales,
Yes.
right? If my existing to bank customer portfolio is under penetrated and bleeding, then where is my repeat sales? I am just driving my new to bank. And by the way, let me just give you another figure there. Because we are absolutely crazy about new to bank, we tell our branches, open 50, 60 accounts in a month. We have looked at this number across in the last 8, 9 years. I've looked at this number across various branches, more than 1,000 branches, more than 8, 10 banks, large, small, medium, all of them. In the 60 accounts that a branch brings in on a monthly basis, business only comes in two and a half to three and a half accounts. So the rest 56, 57 accounts that are being opened actually never land up bringing in business. So you give the branches these goals. They run around asking people to open accounts. They land up, for example, they'll come to you, Hafsa, and say, बाजी आप अपना अकाउंट खोल लें, फिर एक साहब के साथ खोल लें, एक बच्चे के साथ खोल लें, बच्चे का भी खोल लें, मेरे 5 अकाउंट पूरे हो जाएंगे, right? So the goal for 5 accounts
Yeah, is
is,
met.
but
Yeah,
the business only. I mean, look at the cost that the bank
yeah.
runs doing all of that. But also, this person who's spending all their time opening 50, 60 accounts also has 100 accounts tagged to them that they should be building a relationship with. The biggest cost that the bank pays is moving their attention away from their existing customers and totally on new customers. So I'm not saying like new customers should not be brought in. Generally, people mistake when I say this. You just talk about existing customers. Not at all. What I'm saying is that you work on your existing customers because repeat sales is a big component and should be a big component of your business. But
Yes.
your new to bank should actually be coming through referrals, because the
Yes.
150 customers that these RMs are talking to are customers with shares of wallet. They will refer to you similar customers. So they will not refer to you. I would rather go to a branch and say, hey, listen, these three and a half, 2.5 valuable accounts that you bring in, give me 7 of these. Don't give me 150. Just give me 7 of these. And please start building a relationship with the other 150. That would be my solution. Um, but that's obviously just one of the solutions. There are things that you need to sort of look at. I hope I've answered your question.
Yes, yes, absolutely. And just one more thing is repeat sales also is one is referrals. And second is I feel that your service proposition should be so strong that you attract. So it's like a magnet, right? So people hear about it. Even if I'm not referring, people see, people hear about it, and they like, you know what? This is the bank we want to do service with. This is the bank we want to open an account. So it's like a push versus a pull strategy, right? But your service proposition, not your product proposition, your service proposition should be so robust and so stellar that people say, this is where we want to go. So that is
Exactly.
my, again, the inbuilt service piece coming out. So we are 5 minutes shy of our time. So if we have had two questions and we have, okay, so we have
We have our good friend
we have a
who's
common friend
continuously
who's
looking at the markets and analyzing a way. Najib has put a very good question.
to you. He said, "But up." So you take
Yeah,
this.
yeah, but hey, we can all
7.8
have a go at it.
of total
He says
money supply
7.8
cash
trillion
in
of
the
total
banking
cash
system.
money supply sits outside the banking system, which translates to 66% of
Hmm.
total bank deposits. Yes. Um, this is people with cash at home being used for small business, day-to-day cash transactions. What can the government, regulators, and banks do to bring such customers into the banking system?
Hmm.
That's a very good question, Najib. First of all, one will have to see, what is the profile of these customers. I mean, commercial banks. We are encouraging commercial banks to look at a, a, a profile of customer who can actually give you. And by the way, I keep saying deposits, but every time I say deposits, I cringe inside, because actually the value of that the customer gives to a bank is not deposits, it's revenues. And deposits is yes, funding, but
Yeah.
today banks are running after current accounts because they make money out of the current accounts. But if I was to give you 2 million rupees of my current account, rather than 100 million rupees of deposits of my term deposits at a very thin spread, and give you my credit card business, and give you my auto loan business, and give you my small business cash flow, you would make more money out of me than out of the 100 million rupee customer who you consider high net worth, right? So Najib, to Najib's question, I would say, it really depends. One, what is the profile of these customers, and then one would have to determine, okay, what is the best. Is it commercial banks who are going to, because it's very difficult for commercial
Yeah.
banks even to go and build business through retail business, through their retail customers who are giving them, who are showing them deposits of 100, 250,000 rupee plus. They don't even start, they don't start building relationships unless you've got 15, 20, 30 million rupees in a branch, which is what we're trying to address here. But these customers, one will have to see what is the profile of these customers, and what is the best way to bring. Maybe digital
Yeah.
is an area that can be looked at. Maybe the DRBs coming up now can look at this portfolio and see how
Yeah.
they can reach out to them. I have one example, which Najib would know as well. Another friend of ours, Kasif Shahid, who built Finca. He told me a story. He said, he had a solution, for a digital solution for payments and payroll. And he initially shared it with a few banks and wanted the banks to actually go out and solicit customers. But he said the problem was that the banks weren't actually going out and providing solutions. The banks were going out and saying, "Give me deposit."
Yeah.
So he said, I eventually had to take that solution myself and go to small businesses and tell them, "Listen, this is a digital solution. I can give you payroll, digital payroll. I can give you digital payments, cashless solution. If you take this product." Just because he started explaining this to customers, he started building a business case. So Najib, to your question, partly, I know I'm not answering this fully. I think one of the things that any provider of a product or service can do is to reach out to the customers, understand their needs, and
Yeah.
start giving them their product as a solution, if it is really a solution for their needs.
And I would like to add one again to Najib's question is again, so the proposition for this segment has to be different, right? So again, you go and do a deep dive and understand what's in it for me. Why should they keep money with you? So again, and build the proposition around their customized needs. Only then will they. Otherwise, what's the point? So
Yeah.
yes. So so um,
There's
and
this
then
one
card.
question. Because we have tools available to drive NTB, but ETB, you don't have proper mechanisms.
Proper
I,
mechanism.
I can I feel for Wakar, because
Yes.
I think what he's trying to say is that nobody's driving us to
Yeah.
actually uh, build ETB business.
How do
Everyone
we do
is,
it? This is a
yeah.
cry for help, right? So Vakar, we
Uh,
are here.
Yes.
Uh,
So, yep, Vakar, that is why we're doing this, this webinar, to first of all just start talking about it. And people like you are coming up and voicing the same concerns that we're voicing. But we have actually built solutions around it, and we are working with organizations. It is, it is a challenge, right? At the biggest challenge, by the way, is mindset change, and at times that is at the highest level. So that's something that you need to work with. There's fear that if it doesn't work, what will happen? We have goals to meet, we have numbers
yeah.
to deliver, etc. So yeah, we continue to work with organizations and create this awareness about retail banking portfolios and the opportunities that lie within them.
Okay then. So driving process is more important than driving numbers. Yes, Vakar. And I think with that cue, I think don't miss our next webinar, Vakar, which will be on the pillar of process. So again, we're taking these pillars individually because we can't do justice to all three in one. And hello, Minhas Bojani, nice to
By the
see
way,
you
this is
after
for
a long
Faisal.
time. So this is meeting of old colleagues and friends. Nice, very nice.
Maybe
This,
maybe Minaz, since we are short of time, unfortunately, maybe I can answer this question the next time around. The
Yes.
Let's
next webinar is going to be on the 21st of October, is that right?
yes,
21st of October.
yes.
So please do join us again, and we'll absolutely try to answer this question as well. And maybe
Yes.
that would also, I think, jive in with the uh, pillar of processes as well.
Yes. So
Just
until
one
next
last
time.
comment, which I kind of completely agree with. This is
Mm.
by Danish Jalil Mir. If our producer highlights it. So they say, do you think banks in Pakistan have a correct approach towards developing the retail book through relationship management? Danish, do you think so? Why do you think we're doing a retail reset?
Yes.
No, to be honest, I think there is the approach needs to be reset. Now, all these people in banks, by the way, are very smart people. They are gray matter, etc. And by the way, what we're saying has empirical evidence as well. We're not talking about things that haven't been done in this market and are being done in this market, are being proven over and over again. It's just about, I guess, taking that news to the various parts of the industry, various organizations, bringing them together, talking about it, talking about solutions, and that's probably one of the missions that we feel we will eventually need to take. Retail businesses are very close to our heart, if I may.
Yes. With that note, I think thank you, Faisal Saab, thank you, Salman. And until we meet next time on the 21st of October, same time, 8 p.m. And with this, the pillar we're going to talk about is process. So we would like all our viewers to keep tuned. Thank you very much. Have a
Thank you
good
very
day,
much for
Faisal Saab,
having me.
and have a good rest of the
Thank you for having me.
evening to all of us in Karachi.
Okay.